Hi folks, welcome to a new episode of Per Trade Finder Pro. This is the trade of the month of January 2022, where we are going to analyze the pair LCRX QRVO, which are the tickets that belong to the companies Lamb Research and QRVO, both in the technology industry and both in the semiconductors subsector. It is a very interesting pair because it took place on 4th of November and it ended up in 4th of January, if I recall properly. And the special situation with this pair is that it was very appealing on the first view of the charts, but there is a very important lesson that we need to learn from it, because not everything is what it seems in the surface. So what I did here is basically extract the charts in the view that you were going to be seeing on that 4th of November. And what you see, it's a chart that has a very interesting spike here that goes beyond 3.5 with a very good correlation parameters, with an interesting RSI above 70%, and with a very flat ratio crossing up and down the media. And the temptation is to take immediately the trade because it seems to be quite attractive. The important thing to understand is that even though you see this kind of charts, the very first tip that you have to take into consideration is the fact that when you see this kind of spikes, you should be very, very careful. So let's go step by step and analyze, based on our cheat sheet, the different parameters. Let me just go to this backtest of the pair, the backtest in 3 years. It is also presenting a quite nice graphic, which a PNL that is growing steadily. So from this perspective, it's also an interesting one. Now, the thing is that the first parameter, compounded annual growth rate, is 3.71, and the drawdown is 8.8. And as we have already established in our screening mechanism, we would like to see a higher CAGR higher than the drawdown. Now, that is convenient, but it's not mandatory, and the drawdown being not that big, we could say that maybe this is a yellow in that sense. Next parameter is volatility. So if we go to the volatility chart, what we see is that when the signal was triggered on the 4th of November, as I am telling you, volatility was at 1.6, which is a quite good volatility for a pair. So this is clearly a green. Getting back to our backtest, we see that the co-integration is 0.68 and correlation is 64.77. So while correlation is not that bad, co-integration is very low in our view. You know that we would like to see co-integrations at least above 0.8 and ideally above 0.88, which probably this is a yellow. Next parameter is RSI. So if we go to the RSI charts, what we observe is that when the signal was triggered, it was above 70%, which is good. And we can even say that maybe at that time, if we forget about the right part of the chart, probably there was even a kind of divergence. From the RSI perspective, we could say that maybe even there is a small divergence here that is in our favor. So RSI is clearly a green for us. Next is the standard deviation chart, and try to make a study on how the standard deviation was behaving. And this is where the things begin to really being not as good as we initially anticipated, because once again this spike here is pretty big. This immediately should tell us that there is something strange going on here, and we must investigate further. Even more, if you go to the historical chart, you see that in standard deviation on the 3rd of November, it was minus 0.43, and all of a sudden, in just 24 hours, it grew up to 3.92, which was what caused the signal to be triggered. But this jump here is so big that there is a clear signal of alarm here. So in terms of standard deviation, there is something that is not properly going on here, and this must be a clear red. In terms of the ratio chart, if we go to the chart itself, what we see before is a pretty flat chart, which is what we want to see. So in terms of the momentum of the ratio, it is clearly a green. But we want also to take a look to each ticker individually to see the momentum and the behavior of the price on that date. So if we go here to 4th of November, what we see is that on the left hand of the pointer, you see kind of accumulation phase. So that is okay in that sense. We could say that this price is fine to take the trade. But if you go to QRVO, what you observe is that previously to the date of the signal, which is here, it was somehow beginning to trend down. Then we get this small spike, and then the earning release date, and then this big drop here. So in that sense, this is also telling us that we shouldn't have taken the trade. So this one here, per momentum, should be a red. And then we go to earning dates and dividend dates. And here is where the situation gets completely wrong. Basically, what we observe is that in Lamb Research, on the 4th of December, there's nothing relevant that we can see in the headlines. But if you go to QRVO, what you see clearly is that on the 3rd of November, they were presenting their Q3 21 earnings call. And that is what caused the signal. Then, if you following this web, for example, you see here why QRVO stock fell sharply, and the reason is, if you read this news, basically because they didn't met the market expectation, and that caused the signal. So, as we always say, one of the very first things that you have to do, even if I did it in the reverse order on purpose in this video, is check news. And by checking news, you will immediately realize that the earning dates were problematic. yeah, it was problematic because they were presenting results. So these are clearly red flag here for both boxes. So all in all, you end up in a situation in which you realize that most of the boxes has become red after a deeper analysis, and this is clearly a situation where it's a no-go for this trade. You have 1, 2, 3, 7 reds against 4 greens. I mean, no way. This should be always a no-go. If we should have go uh, through a in-depth analysis, we should have not taken the trade. You should have avoided what finally happened recently on the 4th of January. The trade reached 0.83 standard deviation with a loss of almost $370. You should have avoided this by just really getting in depth in the details and not just going with the temptation of seeing a nice graphic and then just go directly for the trade. So be cautious, go in depth into the details, go in depth through the different parameters, and as we always say, always check news. So with that, thanks for your attention. Remember, this is not a trading advice, and for further information, read this disclaimer. Thanks a lot, and I'll see you in the next episode. Take care.